Thank you, Aviv and HFN for having me. As mentioned, my name is Omry Ben David. I'm a partner at Viola Ventures. I want to spend the next 10 minutes kind of going through a little bit about who we are, then talk about the vibrant Israeli fintech ecosystem, and finally maybe talk a little bit about investment thesis in fintech and what we see, what gets us excited in fintech these days. I want to pick up from where Dr. Bashkar and Carmen kind of left off and share our excitement from this end for the mutual collaboration opportunities. I like the framework of market, talent, capital, fintechs, incumbents, and regulators kind of working together from both sides to make this a mutual partnership. And again, excited to be here and share my thoughts. So the Viola Group, we are the largest tech-focused investment firm in Israel. We manage about $3 billion of assets. We've been around for 20 years, and we have touched along the way about 200 companies, whether on the equity side or the credit side. The way we work, we have 4 different independent funds. Each fund is operating with its own partnership, investment committee, LPs, etc. All of them are relevant for the subject matter, although I represent Viola Ventures, which is the early stage side of the house. But we have a credit fund that provides alternative lending and venture lending to fintechs. We have a later stage growth fund, and we actually have a dedicated late stage co-investment fintech fund that only touches on that vertical. But Viola Ventures is really the early stage fund here. We used to be called Carmel Ventures, for those who know the Israeli industry for many years. We manage about $1 billion. We are the oldest, I guess, most veteran fund within the group. As mentioned, we focus on early stage investments, so anywhere from seed to B rounds. And we operate in what we call a home run strategy, realizing that VC is all about an outlier business. You want to invest in those companies that are going to become global category leaders and make sure that you have enough ownership along the way to make it count for the companies, for you, and for your LPs. Our mandate is we lead Israeli investments globally. It doesn't have, founders don't have to have actual presence or footprint in Israel, but we need to have some affiliation with Israel. Important to know that more than 85% of our own investors, our limited partners, are non-Israeli, right? So Israel has managed to attract a lot of foreign capital along the years. And of course, we look forward to enhance that partnership with the UAE as well. We're 6 partners, and as we have 5 funds currently investing out of our 5th fund. So we've been long on fintech for a long time. I think we liked the term fintech before there was a term fintech. You can see the breadth and depth of our fintech portfolio within the group, and basically the sort of the spread between the different verticals, all the way from investment management that I'll talk about later, to cross-border banking and remittance services that are also relevant for this discussion, lending and SMBs, insurtech, fraud, regtech, and identity and access management that Dr. Bashkar referenced in his discussion, embedded fintech and horizontal engagement tools. And we've had a few successful exits as well, but more than 20 companies that sort of touch either directly or indirectly the fintech space. Aviv touched on the Israeli ecosystem. These slides are coming from SNC, Startup Nation Central, which is a non-for-profit organization in Israel, where we were proud contributors as a VC to the annual report on fintech that they've done. Feel free to go to their website and look at it. It's an interactive report. But as Aviv mentioned, more than 500 fintech companies or startups in Israel across different verticals, so not very concentrated. And you can see on the right-hand corner, $1.8 billion of capital, more than 2x 2018 in terms of capital that was attracted by mostly foreign investors into Israeli fintechs. And 2018 was a record year in of itself. I added here the quote that we shared in the report, a legacy of success. It's an important point because we think second-timers fintech and experienced entrepreneurs, they serve as role models for the Israeli fintech industry. and what we call success leads to more and more success. So fintech has been, and I expect it will continue to be, a very prominent sector in the Israeli innovation hub in general. This is a map that the Viola Group is periodically updating of all the fintech startups in Israel that have raised more than $1 million. Feel free to download it from our website. But I think, again, at the end of the day, there is so much fintech innovation here. And as we just heard, there's so much innovation in fintech in the UAE. The way we think about it is how we can collaborate better together and make this a mutual partnership or a mutual success. And I think, Israel has always been, the criticism about Israel has always been that Israel is a relatively small market, right? You have 9 million people living here. I think the population in the UAE is similar, albeit one of the things that get us excited is that the UAE will be a great partner for Israeli innovation, but the UAE can also serve as a gateway to the broader Arab world. And then you sort of expand the opportunity to levels that, frankly, the Israeli community has not seen before. So I want to spend maybe the last 4 or 5 minutes to talk about investment thesis. I'm happy to elaborate more if people are interested later on, offline or in other events and circumstances. But essentially, fintech is always evolving. I think that's true for many, many industries. But what I was trying to capture here is the evolution of the revolution of fintech. So the way we think about it, fintech really started sort of after the financial crisis of 2008. It started with payments and remittance service that were quite basic for the time, but innovative, right? It wasn't about transferring money from a specific branch of brick and mortar. And then it evolved. From 2010 to 2014, we saw neo-lenders like Prosper and Lending Club and SMB lenders like Bluevine and Fundbox. We saw wealth management like Wealthfront and Betterment, fintech APIs with Plaid, etc. Fast forward to 14 to 18, we started seeing insurtechs that Israel has actually had a prominent role. Lemonade, Next, Hippo Insurance. We saw the emergence of challenger banks and neo-traders, Robinhood, Monzo, N26, etc. Peer-to-peer payments like Venmo in the US started. And of course, core banking systems have started to evolve. And right now we're sort of in a place where we are big believers in banking as a service, embedded fintech, open banking that is very prevalent in Europe and is expanding into the US, B2B payments that is getting kind of the next generation of payments. And for the future, again, we look at more and more liquidity platforms, democratization of financial services for underserved markets, whether it's SMB or the developing world, digital money, question mark, whether that's going to be hit a sort of a critical mass, reinsurance that hasn't been disrupted yet, and insurtech sort of 2.0. But that just to give you a flavor of fintech is dynamic, fintech continues to evolve, and I think if we speak every 6 to 12 months, you see that this map is continually evolving and changing. These are the current investment thesis that we feel strongly about today. We sort of categorize them between disruption and transformation. On a transformation side, which we're not going to touch today, but it's how artificial intelligence, robotic process automation, and NLP can actually make processes and operations, whether it's back office, middle office, or even front office in financial institutions more efficient. And of course, RegTech, as I mentioned before, with more and more regulatory issues and compliance comes into play that requires automated tools to make sure that the incumbents and startups are in compliance. On the flip side of it, disruptors, banking as a service, embedded fintech, or vertical financial services, insurtech that 2.0 that still has a lot of place to innovate, and asset management or liquidity platform. I will try to touch two of them quickly and then wrap up. So what do we mean by vertical financial services or embedded fintech? Basically, you take a very large industry that hasn't been disrupted with financial services. It could be healthcare, real estate, mobility, e-commerce, agriculture, etc. You think about bespoke solutions of those types of customers. It could be hospitals, real estate developers, large farmers, or kind of a shared economy, if you look at mobility, and you try to add a capital source that is willing to take capital risk for high returns. And then within that specific vertical, you leverage proprietary data, risk scoring for the data, engagement tools, and UI, UX that sort of helps you serve that specific vertical in a good manner. And I want to give you one example from our portfolio. It's a company called Payzen. Payzen is disrupting sort of this vertical solutions into the healthcare industry. So on one hand, you have a patient, an American patient at this point in time that receives an electronic bill. The electronic bills today, these are for patients or consumers that are actually insured. They have a high FICO score or credit score, but still hospitals are only managing to collect between 15 to 20% of their copays. Why, you ask? Because they don't have transparency, communication, and payment plans. So basically, Payzen is going after those consumers together with the hospitals and offering them 0% APR to pay their outstanding bill between $500 and $10,000 for 12 months, right? So the first win is the consumer that gets a payment plan with 0% APR. And Payzen also underwrites that patient by FICO score and other proprietary data. On the other side, you have the hospital. The hospital, as I mentioned, only collects between 15 to 20%. So it's a huge, both from a issue from a resource efficiency, but also from a cash flow perspective. And what Payzen is doing is each time they underwrite a patient, they prepay the hospital a certain amount. Let's call it, for the example, 60%. Okay, so they prepay. The hospital used to get 15 to 20%. Now it gets about 60%. And in the middle, you can bring a capital source that finds this asset class attractive. So you basically benefit from a spread between what you pay the hospital, what you manage to collect from the patient, and split that spread between Payzen and the capital source. So really efficient, both patient engagement and a fintech play. So that's on embedded fintech. Hopefully that gave you a little bit of a flavor. And then quickly, just on asset management, we are big believers that assets management or financial services need to be democratized. It helps inclusion and access, transparency, affordability, and flexibility. I want to give you one example here on the right-hand side of one of our companies that is called Pagaya. Pagaya manages $2 billion of assets under management, but it's really a fintech technology play. Pagaya sits on top of lending platforms, whether it's Lending Club, Prosper, Auto Loans, etc. And by using risk scoring and underwriting, able to cherry pick which loans you should actually take from that pool of loans, from that blind pool of loans. And instead of making 6 or 7%, which is your typical return from those types of platforms, you can make an alpha of 4 or 5% consistently on top of that. So Pagaya is really taking capital or managing capital for other large institutions to be able to deliver those types of consistent returns. So with that, I'll wrap up. Thank you again very much for having me, and we're excited for these types of collaborations.